Let's bring on board Sandip Sabharwal in the meantime and discuss the market outlook. Sandeep, hi there, morning. We quizzed our experts as to whether or not we can see the Sensex at 1 lakh within a few years from now, and everyone said a resounding yes. What's your view?
It has to amount, but ultimately, like the GDP keeps on growing. So, if the GDP keeps on growing, then Sensex will obviously reach that level. When is the question mark, and that is tough to predict.
Point coming in as far as the Sensex at 1 lakh is concerned, matter of when and not if. But Sandeep, what about the entire paint stocks? Because we have seen a lot of competition today. Of course, Grasim is going to be in focus because they have launched their sparkle painting services as well. Do you expect the incumbents, the likes of Berger, Asian Paints, to manage to maintain their market share, or do you see a big threat coming in from the new players?
So there'll be a big threat simply because of the fact that paints is a very high margin business. If you look at the operating margins of Asian Paints, which is the market leader, they are so high that it makes sense for a disruptor to come in, price lower, and still make healthy margins. So Grasim, even if it prices, let's say, 10% lower than Asian Paints, still it will make double team kind of margins, which is very good in a paints kind of business, which is not so capex intensive in terms of the asset turnover. So there will definitely be disruption. There will be price war of sorts in the short run as the incumbents try to maintain their market share. We've already seen a few other players enter, but slowly, like JSW Paints entered, JK Cement has announced. We've seen some small players like Estel and all coming, but they are relatively smaller players. Grasim is investing at 10,000 crores for this entry. So I think they'll come in with a big bang and it will definitely disrupt. So I think we've seen a good rally in paint stocks from the bottom as the results were decent and input prices have been subdued. But for those who are already invested, I think they should be trimming holdings. New buyers should not be buying this sector at this stage.
Okay, fair enough. That's a view coming in on the entire paint sector, and we'll be closely watching out for Grasim in particular in trade. Sorry about that, Sandeep. Remember, I mean, you've been bullish on the entire hospitality space, and we have seen most of the companies deliver a pretty strong set of numbers due to the very healthy rebound in travel. Do you think that this momentum of healthy occupancy growth, etc., will sustain, and just revisit some of the stocks that you remain bullish on?
Yeah, I think it should sustain simply because of the fact that a large part of the initial move was driven by domestic tourism. Now, foreign tourism and business travel has started to complement that, and that will add to continued performance. So I think I still believe that one good thing which many of these companies did during COVID was to look at their costs, reduce costs, and focus on profitability. And once demand is coming back, that's impacting their profitability even more significantly on the upside. So I believe this entire sector will continue to do well. I think we have at least 2-3 years more of strong performance ahead of it before possibly we could see more supply coming in and impacting the average new revenue growth, etc. But as of now, there doesn't seem to be any concern.
Okay, now what we're going to be perhaps bringing out for our viewers, and this is a series of conversations which we've had with Chris Wood, Nilesh, Shankar, Mark Mobius, that when will the Sensex touch 100,000? And that's a point which I'm going to ask Sandeep also. Sandeep, do you think in next 4.5 to 5 years, Sensex could touch 1 lakh? If yes, why? If no, why not?
If yes, answer is very simple because even if GDP grows at 7% and we have a 4% average inflation, will have maybe more than that. Just a 11-12% compounding will take Sensex above 1 lakh. Now, on top of that, you have potential gains from productivity improvements, potential gains from higher growth and improvement in profitability, and new sectors coming in which could add to the overall growth in the market. So I think for an economy like India, it's a given. Now, will it happen in 5 years? My guess would be yes, it should happen with prices.
So I just want to talk a little bit long term for the benefit of our viewers. While we can talk about X, Y, valuations, problems in the world, what's happening to the US debt ceiling, what will happen to the general election cycle, how things are moving in terms of the rural economy. The bottom line here is that historically, Indian markets have multiplied in the range of about 12 to 14%. And we are in a much better shape in terms of progress, our indicators, our debt to GDP ratio, and a control on inflation. If the economy multiplies at historical run rate, which is like Sandip just mentioned, a 12 to 13% compounding from here is a not a probability but a possibility. So if you do a maths on this, it is entirely conceivable that in next 4 to 5 years, maybe sooner, maybe later, but in and around next 4 to 5 years, Indian markets or the Sensex can easily touch 1 lakh. Naresh Mirani, long-term charts, I mean 5 years could be a stretch to talk about right now, but do you see the potential of Sensex touching 1 lakh?
When you were asking the question to Sandeep, I was just putting a simple CAGR. It's very simple. Say if you look at current Sensex prices, 5-year return towards 1 lakh would be closer to 10% CAGR. And that should be our minimum expectation from Indian markets over a 5-year, 8-year cycle. So overall, the viewers, we are setting up for that number. We could surprise on the upside rather than on the downside, unless something changes in the world out of nowhere. And if we look at the price action, this is how the cycles have been. We get into a bull market, consolidation market. So after 2015, we went to a phase of 9,000 to 7,000. The next time we moved up about 9,000, we went up 25%. Now in 2021 to 2023, we've gone from 18,800 to 15,000, a similar 20% plus correction. We've spent a year and a half. The next time we go about 19,000 over a period of time, we should go up another 20%. So same thing moves up from 60 to become 75 as such over the next a year and a half if that breakout plays. So technically, we are setting up for a fresh breakout into all-time highs. So the next 1.5 year does look promising, and over a 5-year period to expect 10% CAGR should not be a bad number.
Okay, I'm going to shift gears and talk about a stock which Kunal has been perhaps advising our viewers almost on a daily basis. Just like Naresh has been advising our viewers to buy Indian hotels from last 2 years, Kunal has been advocating his clients and advising our viewers to buy into Tata Com. And Kunal, it's been a good call. Irrespective of what is happening to the IT space, Tata Com has moved on a different planet.
Well, yes, Nikunj, and in fact, I think the best is still not happened for Tata Communications. At least over the last 2 or 3 months, there have been very strong, consistent patterns of a strong uptick for Tata Communications. That's been complemented by very strong volumes for the stock, a breakout on indicators. Then all of a sudden, you see a stock getting into a mild reversal, going into a profit booking mode, remaining quiet for a few weeks, and then gearing up for second round of breakout on the upside. So we've seen that pattern consistently for Tata Communication. This generally happens when the stock comes out of extreme negativity and is still trying to find its feet in terms of a strong follow-through uptrend. My belief is that Tata Communications should at least cross back about the 1400, 1450 mark, possibly in the next 1 or 2 months, just plainly looking at the last 2 or 3 months of chart pattern. So I believe that the best is still not happened for Tata Communication, and there could be still more upside for the stock, at least over the very near term.
Sandip, back to markets, and it's been a 10% plus uptick for the Nifty from the low. It's been a 12-13%, more than a 10% uptick for the Bank Nifty. How are you using the gain to your advantage to lock some gains? I mean, you also have a tactical approach, which I've seen over the years, where you want to time the market for some near-term gains.
That's true, but I'm not bearish at this stage. I think people have been very bearish in March itself, which is less than 2 months ago. People were so bearish that many were predicting 14, 15,000 for the Nifty. So I don't think that the pessimism cycle has played out. And on top of that, we have to tactically also evaluate the global funds flow picture. Many people who flocked into China thinking that there is going to be huge revival and valuations are cheap have many foreign investors have started to realize that China is in a deeper rut. It's very tough for them to revive the economy by any significant extent. And India is the absolute opposite side. Look at the financial sector in India and financial sector in China. They have zombie banks, they have local governments facing so many issues, debt issues, etc. Their real estate is in a mess. India is on a total flip side. Uh, Indian PSU banks made 1 lakh crores of profits last year from having to rely on bailouts from the government 5, 6 years back. The situation is totally different, and I don't think it's time to be negative at this stage. Valuations obviously at some stage will become excessive. At that time, we'll take out some cash off the books and hold some cash. But I think it should be still somewhere.
About, but of course we have the 2-day spectacular event underway in New Delhi, that's India Economic Conclave, and Vedanta Resources founder and chairman Anil Agarwal spoke, saying that India is determined to make semiconductors and the world does not want India to become self-sufficient in developing electronics. Let's listen in.
Is very important. इलेक्ट्रॉनिक जो है आज दुनिया नहीं चाहती है कि हिंदुस्तान रिसोर्स डेवलप करे, इंपोर्ट बेस रहे और हिंदुस्तान इलेक्ट्रॉनिक डेवलप करे. वो क्या बोलती है कि आप स्मार्टफोन बना लो, आप लैपटॉप बना लो, लेकिन चिप्स आप हमसे खरीदो. ये कैसे हो सकता है? ये कैसे हो सकता है? हम सेमीकंडक्टर बनाएंगे, हमने कफन बांध रखा है सिर पे, हम ग्लास बनाएंगे, हम जो यंगस्टर को 3-4 चीजें चाहिए. अगर 15 साल के बच्चे को अगर लैपटॉप मिल गया, वो जॉब खोज लेगा. वो जमाना चला गया जब वकील बनना है, इंजीनियर बनना है, मार पीट करके बच्चों को तैयार करते थे कि आपको डॉक्टर बनना है. नाउ इज ए लिबरल आर्ट्स टाइम. He has a quality, he has something skill, and he can only find out if he has a laptop. And laptop has to be available as very, very affordable price at 25 to 30,000 rupees. A smartphone has to be available. He has to have a scooty at very, very reasonable price. These 3 things you have to provide to the 15 years old boys. And this we will provide.
That's the commentary coming in from Anil Agarwal of Vedanta, quite bullish on the opportunity that is available for semiconductor manufacturing back home in India as well. But Sandip, apart from the semiconductor manufacturing opportunity, the entire opportunity seems to be in the electronics manufacturing as well, a vertical integration of that, if I may. Dixon, Amber, Sirma, SGS, Keynes, etc. We have been talking about these stocks, but is there any name that you would want to pick as a top bet which hasn't run up quite a bit? Valuations look okay?
You already named the larger players. Now, the issue with this business is that one, it's contract manufacturing, so it relies on what the OEMs want. Secondly, it's a very, very low margin business. Thirdly, the valuations of these stocks are so high that I don't see any value in them at this stage. A contract manufacturing company cannot trade at 70-80 price earning ratio, which normal branded companies also don't do. I believe the valuations of these companies are totally distorted. If they come to reasonable levels, we might still look at it, but I wouldn't look at it at this prices.
Okay. I go back to Reliance. Why is Reliance not moving higher? Sandeep, why is Reliance not moving higher? It's getting quite frustrating for a lot of market watchers that nearing an all-time high on the Nifty, Reliance, HDFC Bank, Infosys, the 3 horsemen in the market are completely on the sidelines. Sandeep?
So Reliance has done something in the near term, but nothing compared to what it did in 2020. Last 3 years have been in consolidation. And one of the major reasons why it's not performed is that it made a promise to investors of going zero net debt. And when we look at the balance sheet now, we still see a net debt of 2 lakh crores and still growing with their living age energy plan. So I think that will keep the valuations down. That said, after such huge period of underperformance and earnings growth, the valuations are now much more reasonable. And to that extent, the possibility that the stock has an upside of 10-15% here from here is extremely great, given the fact that uh, the retail profitability would be bottoming out from the telecom side. Things could incrementally improve. The oil and gas and the O2C business might be better going forward. So there are things are falling into place in across their businesses, although moderately, and that reduces downside risk and provides some upside.
Okay. Let's talk IT. Nuresh, in a bull market, sectors do not underperform for long. Do you think IT is nearing its end of decline? If yes, which IT stock do you mind could give a tactical jump?
Started seeing a lot of momentum in the small cap and the mid cap space. You can pick up names from a Saxoft to a Persistent to a Sonata to a KPIT Tech. So we've seen the mid cap IT do well, and the only ones which are in pain are the very large ones like Infosys and TCS, which have not done well. Tech Mahindra, which has not done well. Even HCL Tech has started making a breakout move. The stock is the best looking chart in the larger IT space. So HCL Tech could be the first one which could actually surprise on the upside. I would expect it to go towards 1250 to 1350 also. And that would be a move towards the previous all-time highs. So HCL Tech is a tactical bet. Another bet is Tech Mahindra, which has now started basing out. The stock has gone through a sideways period for the last 1 year, but it's coming back to that resistance of 1150, 1180. If that breaks out, that could be the second one. Then LTI Mindtree is the one which is in the mid cap space, which is shaping up for a breakout over that 5,000 mark. So we are seeing technical confirmations in some of the names. HCL Tech looks the most interesting one as of now, but on Tech Mahindra and LTI Mindtree would be the next. Not as convinced on the large names like Infosys, TCS, or Wipro, but would focus beyond these three names. We've started seeing stock-specific action across the board. A sleepy company like Nucleus Software went up 50-60% over the last week or so. So what we are seeing is selective moves across the mid-cap and the small-cap IT space, and now it could get selective in the larger mid-cap or the large-cap IT space. Would forget the heavies, focus on the rest.
We're talking about IT. Just wanted to flag out that Infosys will be in focus today. It goes ex-dividend, so there'll be an adjustment of 15 rupees there. So we might see a bit of a temporary blip as far as Infosys goes. But Sandeep, wanted to check, do you track AU Small Finance Bank? Because that stock has been scaling fresh record highs. And today, of course, Chris Wood has added it to his long-only portfolio in the greed and fear note. What's your sense on AU Small Finance Bank? Should one buy it even if they have missed out on the rally so far?
No, actually, my view is somewhat different. I do not buy into smaller banks which are going too aggressively. We have seen the pitfalls of that across the board, across banks in the past. And I don't think any bank has such systems which will make it immune to uh, NPA issues, etc., balance sheet issues if it grows more than 2 times that of the overall banking industry, especially once you have reached a particular size. So I would remain cautious on such banks. It's rallied a lot. It has fell also, and then it's rallied quite a bit. But I don't buy into these banks now.
But Sandeep, to be fair, the NPA cycle is still not there, and these banks are growing because they have a small base, and B, because the credit cycle itself is looking strong. So the fact that they're growing, is that the only criteria you will not buy a small cap bank?
Yeah, because they don't have a cost of fund advantage, and then on top of that, they grow very aggressively. So it looks very good in a good cycle when rate cycle is benign, economy is doing well, and then suddenly they get into issues, and those issues turn into sort of vicious cycles. So we have seen that in the past. So I so see our return expectations are moderate. So we are not looking at buying into multi-baggers in every sector. Financials is one sector where we need to have a more cautious approach. We can be more aggressive in other sectors.
I always share this point with our viewers that financials, they are owned and they are over-owned by institutional investors. But remember, ultimately in financials, you are running a balance sheet which is a leverage balance sheet. The best of the bank in India, and I'm using HDFC Bank as an example, their return is, the ROA is not even, ROE is not even more than 20%. And there are a lot of companies which do not take that leverage risk, and the return ratios are far greater. So when you are looking at analyzing the market from an institutional standpoint, they have to hug the Nifty, they have to beat the benchmark, but they cannot deviate too much away from the benchmark. And that's where most of the funds, both global and local, have a preferred weightage towards financials. Financials are doing well. As a cycle, it's doing very well. But ultimately, when the economy reverses, and which is the risk what Sandip flagged off for some of the small banks, the risk of some of these banks reversing actually, or financials reversing actually, could be extremely high. Kunal, a stock which we discussed last Friday, and it was almost like a slam dunk, Page Industries. Has Page Industries bottomed out?
Well, not really, Nikunj. I think the stock has just gone through a recovery post the sell-off. I think from 36,500, 37,000 of closing, I think on Thursday previous week, the stock has recovered to 39,000, but it's not closed that gap which had been created on that single day of sharp gap down. That I think the upper end of the gap is still at 41,000 for Page Industries. And when I look at the charts, it's the recent volume setup for Page Industries still indicates that this is more to do with a sell on rallies rather than a buy on dips for Page Industries. I believe even if the stock possibly comes back to that 40,000, 40,000, 41,000 mark, it could actually be an indication of trying to cut short more positions rather than building off more long positions. So I would not be too much enthused by this recent rally for Page Industries post that sharp sell-off, and I would probably consider this to be a sell-on rallies candidate. My sense is that once the stock goes into a double bottom formation at the 36,000 mark, that could be a real indication of a near-term bottom in place. So as of now, avoid.
As of now, an avoid coming in as far as Page Industries is concerned, but it's not at all an avoid when it comes to the Indian markets, whether it's Mark Mobius or Chris Wood. All of them are saying that we are just at the cusp of a long-term bull rally when it comes to India, and that bull rally can take the Sensex all the way to 1 lakh mark. Listen in to the comments coming in from the biggest market voices.
Now that to me is very reasonable. Yeah, very. I would be disappointed if the Sensex had not touched 100,000 5 years from now.
I'm absolutely certain it will reach 1 lakh. Now, whether it happens in 4 years or 6 years, frankly, is really a meaningless debate. But looking at the nominal GDP growth rate, which we are looking, you can safely say we can grow between, say, 12 and 14%, maybe 10 and 14%. You will approximate that number, and if you compound it at that, so in 4 years, roughly from 60,000, you add another, say, it comes to approximately 1 lakh in 4 years. It's not a reach to see 1 lakh, just at the simple compounding of the nominal GDP rate. I think it's a given, 100%.
Market को predict करने की कोशिश मत करो. More often than not, you will be wrong. But today, is 1 lakh Sensex looking unimaginable? Answer is no. And my request to this audience will be, just don't think about 1 lakh Sensex. Beyond that also there is a much, much longer journey.
Generally speaking, if a country is growing at 7%, you can expect companies, reasonably good companies, to be growing at 14%, double the growth rate of the country. So it's very possible that you can get this incredible growth in the size of the market and the actual investments in the market, no question.
Okay. Kunal, we've not discussed Adani group of stocks. They were the comeback boys, the comeback group, at least in late May. Could April be another sparkling month could June be another sparkling month for Adani stocks?
Well, it could be, Nikunj. In fact, for Adani Enterprise specifically, I think if I can call it so, the highest beta stock from the Adani, pack, I think that stock has done reasonably well in the last 1 or 2 weeks from 1800 levels towards 2700, 750 mark, where the stock tested. So almost like a 1,000-point rally for Adani Enterprise. And post that rally, we've not seen the stock going into a V-shaped correction. It's in fact gone into a sideways correction over the last 4-5 days after that rally for Adani Enterprise. So that itself indicates that this is more to do with a time-wise consolidation rather than more of a price-wise correction for Adani Enterprise. And generally, when stocks rally up 1,000 odd points or 8 to 10%, we expect the stock to get into at least a couple of weeks of time-wise correction before they get ready for a breakout on the upside. So is the case with the other names. I think Ambuja Cement, for example, the stock had done exceptionally well from 350, 360 levels to 440 or 445, which was the high for Ambuja Cements. And from there, it's corrected back towards 430 levels. So a very mild correction, a strong uptick from Ambuja Cements. Same is the case with the Adani Port. So I would believe that there should be more upside left for many of the Adani group of stocks, specifically the two names which have been as well as Ambuja. They are the ones which are looking more solid, as well as very low to moderate beta kind of stocks.
Sandeep, some of our common friends are telling me that finally you've changed your view on consumer tech and fintech stocks and you're looking at adding some names in your portfolio. Are the rumors in Delhi right? This time it's not a Bombay rumor, it's a Delhi rumor.
Delhi rumors are always wrong.
So you don't buy consumer stocks. You're not going to buy fintech and consumer tech, even though a lot of the companies are now defining and redefining the path to profitability, whether it is, PB Fintech or Zomato or Paytm.
I'd rather buy those consumer stocks which are already making profits and which will see a revival. See, I'm not looking at making 100% returns. I want steady returns. So I think steady returns will be provided by consumer stocks which are currently beaten down and suffering from lower consumer demand. So I think there are companies now exactly at these prices whether we should buy or not. I'm not sure, but offhand, like companies like Voltas, Havels, something like a Dabur, Bata, all of these stocks are relatively down. And once consumer demand revives, many of these established companies will do well. The consumer fintech companies have a lot of issues. Their valuations are not cheap. Whoever thinks their valuations are cheap, I think doesn't know how to do valuations.
All right, clearly it seems like the rumor mills are wrong and Sandeep continues to stick to that view when it comes to new age tech. That, by the way, is the pre-open ticks on your screen around the 18,560 mark, and for the Sensex, we're up about 90 odd points. Let's find out what those mid-cap strategies are from our chartist. Kunal?
Well, I'll bet with another pharma name. So Glenmark Pharma is something which I would recommend as a buy, something which I've been recommending earlier as well. I think looks very interesting now as a setup. After a week or 10 days of consolidation, the stock seems to be ready for another round of up move. So buy with a target of 640 for Glenmark Pharma. Stop loss for this trade, 597.
Continuing to remain bullish on pharma, it's Glenmark that's on Kunal's radar. Naresh, what's your pick?
So that would be a buy on Industars. The stock has seen good volumes in the last two sessions. A double bottom done here. 160 is the breakout point. Came close to it yesterday as well. Expecting it to catch momentum, go towards 180, a quick short-term move. Stop loss at 152.
Those are the top bets coming in. Indus Tower is something that Naresh continues to like. But shifting focus to get you the headline.